Your local bank prints money. Did you know that over $1 million will be stolen from you? $1 million. To make things worse, as if having any amount of money stolen wasn't bad enough, you'll probably only make 1.5 to 2.7 million during your whole life. A third to two-thirds of the money you make will be sucked right out of your hard-working hands. This thief is a vampire, not a brazen mugger. Instead of robbing you blind in one fell swoop, you'll be bled over the course of your entire life, slow and steady, in the hope that you never notice. And how does this monetary vampire work his dark magic? Through inflation, a thing few understand. The blame usually falls on the Federal Reserve and its evil printing presses, but that's not quite right. What expands the money supply under the guidance and support of the government and the Federal Reserve are not the distant printing press operators. No, the thieves are right in your neighborhood. The people that destroy your money's purchasing power are the loan officers at your bank. In this video, you'll learn how fractional reserve banking, essentially the only banking system that exists today, facilitates the expansion of the money supply, how that hurts real people, and how Bitcoin offers a better future for everyone. Let's dive in. Fractional reserve banking is the dominant and basically exclusive banking system in the industrialized world, but it is relatively new in the history of money. Fractional reserve banking works by requiring banks to hold only a fraction of their deposits in reserve, typically as cash. This means that as long as they stay within the required limits, banks can lend in excess of their deposits, effectively creating new money. Before fractional reserve, lenders only lent out what money they had on hand and was available for lending. You couldn't lend out gold coins you didn't have. But that all changed when a few goldsmiths saw a new, dangerous opportunity: lending promises. Fractional reserve lending by goldsmiths in England dates back to the 17th century. At that time, goldsmiths were among the few institutions that had the necessary infrastructure and expertise to safely store and manage large amounts of gold. As such, they became popular among merchants and the wealthy who wanted their gold securely stored. The goldsmiths issued receipts to customers who deposited gold with them, which could, in theory, be redeemed for the deposited gold at any time. The goldsmiths soon realized that they could lend out more receipts than they had gold, as long as everyone didn't demand their gold at once. Of course, in times of financial panic or crisis, people did demand all their gold at once. Too many IOUs, not enough gold. Let's say the whole circulating money supply is $100, held by 10 people, for a total of $10 per person. They each deposit their $10 in fractional bank and trust, and they each get a receipt saying they are owed $10, which they can demand at any time. Fractional bank has deposits of $100. Fractional bank is, of course, a member of the Federal Reserve System, which requires them to keep 10% of their deposits on hand at all times. Dorian walks into fractional bank and wants to borrow $90. Fractional agrees because this won't touch their reserves and the loan is good business. They write a check to Dorian for $90, who deposits it into Goldsmith's bank, and Fractional sends $90 to Goldsmith's. Now, Fractional has $10 cash, but they also have $90 in assets, the money Dorian owes them. Fractional has $100 in total assets, and Goldsmiths has $90 in total assets. There's $190 in the system now, all from the initial $100. You see, the money supply is not only the hard currency, but rather it consists of all hard currency and all bank deposits. Just like your money is not only the cash in your wallet, it is the cash in your wallet plus the money you have in your bank account. Now Goldsmiths wants to loan their money out to make a profit on the interest. So they loan Hal $81, keeping their required 10%, $9, in reserve. Hal deposits this into Cantillon National Bank. Now Fractional has $100 in assets, Goldsmiths has $90, and Cantillon has $81. The money supply is now $271, all from $100 in just 3 transactions. This is what fractional reserve banking does. It multiplies money by creating promises. This funny money ripples through the economy on and on, ever inflating and reducing the buying power of saved money. By the time that initial $100 has moved through the banking system, it will have multiplied 10x to $1,000. Since the creation of the Federal Reserve, there has been a recession almost every 6 years, and the Great Depression, which has devastated the US economy. Since the total abandonment of hard money and the suspension of the gold standard, real wages have fallen. Debt has increased and income inequality has skyrocketed. Single-earner households, once the norm, are now rare. Debt used to be short-term and at low levels. Americans are now drowning in a sea of debt and struggle to raise even small families on 2 salaries. Traditional family structures have broken down because both parents need to be employed. Americans have become accustomed to ideas once unthinkable. Prices will always continue to rise. Saving in cash is a poor decision, and people get rich not by working hard and creating, but by having connections to those in control. Bitcoin can help clean up this mess by reinstating a system of hard money like we had with gold. Much like gold, Bitcoin cannot be created except through the investment of resources and time. No central bank can print more to inflict inflation on the market for short-term economic growth. Fractional reserve lending also becomes difficult. Paper and digital promises of gold were attractive because they were easier and safer to transmit and store. But people always preferred real gold to a promise. Why would you ever take a promise of something over the actual thing? Bitcoin has a lot of growing to do before it is large enough to fulfill all its promises, but it is growing exponentially. Its growth already outpaces that of the internet. As it continues to be adopted, it will have a massive positive impact on the ability of everyday people to earn, save, build wealth, and leave a better world for the next generation.